Indian IT sector is set to have a washout year of financial year 2024 is likely to be a washout is what JPMorgan is saying. JPMorgan analysts are anticipating that investors will closely examine the forthcoming second quarter financial results and the commentary provided by Indian IT companies to decide on the future course of action. They will be searching for indication of a rebound in the numbers of deals that have been signed and will have an impact in fiscal year 2025. Now, JPMorgan analysts remain negative on the sector in absence of a meaningful uptick in demand. Remember, all major IT firms, including Infosys, TCS, Wipro, HCL Tech, have previously warned that their clients, a majority of whom are based in the US, have been lowering their IT spending, delaying and even cancelling contracts as economic growth prospects slow down on fears of higher for longer interest rates. Joining us is Barnik Chitran Maitra, Managing Partner at Arthur D. Little on the show. Barnik, good afternoon. Not so very good news coming in there. The commentary on IT pack, IT sector will not augur very well for the sector. We don't know what the impact is on the markets just as yet. I'll get my colleague Suyash to comment on that. But as far as the prospects of IT sector is concerned, looking bleak for this year.
Yeah, I think last quarter results were also quite disappointing. I think to just go back a few quarters back, I think FY23 was positioned as the big washout year with green shoots in FY24. However, that has not happened as the IT sector continues to battle what I would say a perfect storm, right? You mentioned new deals slow down, renewals are under pressure, and when clients are renewing deals, there is actually severe pricing pressure on the deals. On that, I think there was severe cost pressure last cycle. I think all firms reported a 150 to 200 basis point drop in margin. So FY24 looks bleak. I would be on the lookout for some green shoots towards the second half of the year, not this quarter earnings, but maybe the next quarter and the final quarter earnings for some uptick in new deals because the outlook in the US, though bleak, is improving. I think the Fed has tapered off its policy stance. There is an expectation that rate cuts will probably start kicking in by FY25. If that happens, you will see some good news potentially at the end of this fiscal, but I think it's fast forward to FY25 for the sector to attain the growth and profitability we've used to see in the sector in the past.
Now, Barnik, I mean, the commentary, at least in the last policy meet from Fed, was that it could look at another rate hike, possibly the November meet or the December meet, and even the narrative that came out from the meet was that interest rates will stay higher for longer. So, where is this expectation of perhaps a rate cut in the near future coming from in the US?
No, so if you have to look at it's not the rate cut. You have to look at the nature of spending and the people who spend with Indian IT service companies. Their two biggest sectors have historically been banking services and technology and telecom. Their largest markets have been US, UK, and North, I would say, continental Europe. I think as many people expect, despite the Fed posture, I don't think people are expecting a hard landing for the US economy. Now, what that means in terms of Fortune 500 decision making is budgets which have been cut are likely to get restored in the next fiscal for them, which by the way starts on 1st October for most US listed companies. So I am hearing that at least for certain areas which are actually fundamentally driving productivity for US enterprises, maybe it's on cloud, maybe it's on supply chain productivity, maybe it's on enterprise transformation, there will be a restoration of spends for US companies towards the second half of the new fiscal, which by the way ties in quite nicely with our FY25 fiscal here. So if you just look at how executives look at it, despite the Fed commentary, I think there is far more optimism around where the US economy will land in the next quarters. And that we are seeing reflected in conversations within US boardrooms and within decision makers. And again, it's important to see the commentary we get out of the IT firms in the quarterly earnings release next week as to what their forecast is. But I would say people are far more cautiously optimistic today than they were around this time when they were announcing the last quarter results.
Okay. The one thing I want to ask you is that what does a washout year even mean for India's IT industry? India's IT industry is leading, the ignition for GDP, for the GDP of India. It is the #1 sector in India, #1 stock in the markets. What does a washout year mean? Are we looking at more job cuts? We're also getting news about, campus placements being cancelled. Are you looking at a reduction in job force? What does it mean for the people of India and the economy of India going forward? What does it mean for our GDP ambitions for the next year?
Well, I think the Indian IT sector has been at the pinnacle of our industry, local industry, for a long time. I think we judge them by very harsh standards, right? A washout year for them means a low single digit or a high single digit growth, revenue growth for tier 1 companies. Maybe it's a low teen growth for tier 2 players. And in general, anywhere between a 4 to 5%, if not 7-8% earnings growth for most players. I think analysts are used to getting quarter-on-quarter growth from these companies, which have now subtly moved to year-on-year metrics. So again, remember, the bar is very high on these companies, and a washout year for them is not a year of negative growth or negative profits. That said, given the fact that growth will be muted, the scale of hiring and absorption will slow. I think there are several news of players who've rescinded campus offers, converted campus offers to internships, which have been there. They are a reality of the market. If your customers in the US are not spending, you cannot honor hiring commitments. But my sense is this is temporary pain for a couple of quarters. I think, in fact, the good news I expect to see next week is that a lot of the CEOs will announce that the cost pressures are beginning to subside, because most of the wage hike impact last March has already been factored in. There's a cooling in inflation in general in India and also in other markets where there's headcount. So I think the worst news in terms of layoffs, deferral of campus hiring may be behind us. Again, very careful to see the kind of commentary we get, but I think the margin pressures today are probably a little better than they were a quarter back.
Mm-hmm. All right, and Suyash, I also want to know, how did IT Pack react to that news?
So IT Pack actually, the IT stocks, the Nifty IT Pack was up about 0.67%, and it's seeing some sort of a rebound, after the correction that we saw last week.
Perhaps in anticipation of the results?
Perhaps in anticipation of the results, and also that we have seen a lot of deals that have, been a lot of the companies have landed some big deals in the last couple of months. If you look at, Infosys, for example, $4.5 to $5 billion worth of deals. I mean, the revenue guidance is for multiple years, but
right.
No, they have landed deals.
The one thing I wanted to ask you is that does the market also factor in the fact that, we're talking about even if you talk about a washout year, that's going to end in March 2024, and then you've got the next fiscal beginning in April. So are, in a sense, positions being built in? Because even if you look at the JPMorgan note, it essentially says that analysts across the world are already under consensus that India's IT industry is going to have a quote-unquote washout year in 2024, and hence are already pinning their hopes on 2025. So is the markets already factoring in that nothing much is going to happen in that period?
Yes, I think that's exactly what played out last week, Krishna. Okay. We saw that the IT Pack came under significant pressure, especially after, Fed said that it will keep interest rates higher for longer. But we are seeing a rebound, and I don't think there is a consensus there, because Morgan Stanley recently came out with a report where it was very bullish on the Indian IT Pack.
I mean, look at the size of the deals there.
Yeah.
From Infosys to TCS, $1 billion worth deal with digital unit of JLR, and those deals, have been signed through this fiscal year.
Yeah, through this fiscal year, and on the back of the big deals that they have landed, Morgan Stanley is bullish on a lot of these IT companies, whether it is TCS, whether it is Infosys, HCL Tech. They have raised target price, to a tune of about 25 to 30% or so. So I don't think there is a general consensus that, IT will underperform. Perhaps maybe globally, but India's IT sector could outperform at least. From according to Morgan Stanley.
All right. There's no consensus there, but I think we'll keep a close watch on how IT sector performs. Barnik, thank you so much for taking time out, for joining us with your inputs on that big story.
Yeah, bye.